what I think of Pump is that they're pursuing financial entertainment. And financial entertainment is fundamentally very different than what most people are doing on TikTok or on Facebook. I do think it's something that Gen Z is much more tuned into than previous generations. And so I can see that this thing could become really big. But the idea that it would kill TikTok, not really, but could it become as big or comparable to something like TikTok? I can see that story.
Hi everyone, welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. We love featuring quotes from listeners on the show. Today we have some comments responding to my recent episode with Brandon Millman, CEO and co-founder of Phantom, on why Phantom chose to launch perps on Hyperliquid instead of Solana. On X, Kefa said, fascinating pivot by Phantom, and a bold statement on where crypto UX is heading. Choosing Hyperliquid over Solana native DEXs says a lot about current infrastructure trade-offs. And on YouTube, Wants to Comments 7092 wrote, Hyperliquid has the liquidity, Ethereum has the institutional credibility, Solana has the meme coins. To have your comment featured, write a review of the podcast overall, or leave a comment on our video on YouTube, Farcaster, or X. This is the July 15th, 2024 episode of Unchained. Crypto moves fast. It's why Bitwise launched the weekly CIO Memo, a jargon-free summary of what's moving crypto markets, written by one of the best in the business, CIO Matt Hogan. Get up to speed in 5 minutes or less. Check it out at bitwiseinvestments.com/CIO Memo. Carefully consider the extreme risks associated with crypto before investing. Ledn is a leading platform for Bitcoin-backed loans, offering a secure and transparent way to unlock liquidity without selling your Bitcoin. Issuing loans since 2018 and earning over 1,000 Trustpilot reviews. Learn more at ledn.io. And today's topic is the Pump.fun ICO. Here to discuss are Haseeb Qureshi, managing partner of Dragonfly, and Joe McCann, founder, CEO, and CIO of Asymmetric. Welcome, Haseeb and Joe.
Hey.
Thanks for having me.
Thanks for having us.
So everybody knows what happened this past weekend. There had been news that leaked earlier, like a month ago, but last Wednesday, Pump.fun finally officially announced its ICO. And the trailer for it was pretty slick. It was very Pump-funny, very on brand, very Zoomerish. And they tweeted, our plan is to kill Facebook, TikTok, and Twitch on Solana. And then they said Pump will grow the Pump.fun ecosystem by delivering value to its community and incentivizing the ecosystem that continues helping the platform succeed. So they said the token would offer things like fee rebates, token buybacks, other incentives. And, famously, people probably know, it is most likely the fastest company to reach $750 million in revenue. So it was interesting is kind of like early on, there was like a negative reaction, like criticism that this was extractive, that it wasn't an airdrop, complaints about the high valuation. So it's just kind of funny to see how sentiment shifted, but I'd be curious, Joe and Haseeb, like, what did you think about the numbers around the ICO? And we can talk about anything, the $500 million raise, especially given the hefty amount they'd already made, the $4 billion valuation, the price, even like the allocation, 18% to institutional, 15% to the public, et cetera. So you can really pick whatever stuck out at you.
I talked about this, I think, on Bits and Bips a while ago or some other podcast where it's like, leave it up to the crypto industry to completely reinvent the word revenue into extraction. Right? Like Pump.fun is a company that's meant to make money, and they built a killer app where they were generating revenue. Now, people use that to potentially do nefarious things, and people use all kinds of stuff to do nefarious things, and thus the extraction. And so the extractive narrative really picked up when meme coins started to go to zero. When they were ripping, no one talked about extraction, right? And so for me, like, I think Pump.fun is an example of a great company that built an amazing business. The timing was impeccable. And there's nothing to, from my perspective as like a VC or an investor or just even a founder or former founder, like, I'm like, hats off to them. Do I think that the lack of an airdrop or the lack of allocation or the price or this and that? Yes, because it's the internet. Everyone's going to be upset. Like, as an example, hear me out on this thought exercise. Imagine if Pump.fun just get 100% of their tokens as an airdrop. Somebody would complain about that they didn't get enough or what. It's just impossible to please the internet. And so, I think, clearly things could have been done better in various ways. Internet capital markets and capital formation on chain dominating in the current kind of environment and landscape, right? Like we had the ICO craze. I know Haseeb was around back then when the ICO craze was happening with Ethereum. You too, Laura. This is a pretty meaningful seminal event for true capital formation at global scale, and the Solana network just kind of hummed right along.
So there are three big things that jump out at me about this story that I think are worth going into. The first is the fact that, like you said, Joe, the sentiment online was so negative about the Pump.fun raise. And there was a sense that like you said, it's very extractive, which I think itself is interesting. The second thing was the fact that there was such a delta between the sentiment and the demand, right? If you read the Twitter replies, you would think, oh, this thing is going to be sitting out there. No one's going to buy it. And in fact, it was massively oversubscribed, sold out in minutes, crazy amounts of capital. And then third thing, Laura, you mentioned this earlier, is the return of ICOs. Right, so this is the first really massive ICO that we have seen in a long time, and it probably portends that this is coming back. People have kind of whispered a little bit about this, of that, oh, hey, maybe under Trump, under these new, more permissive SEC, there's going to be more openness to these kinds of this approach to capital formation. It is true also that the UK and US were restricted, and everything in the Pump ICO had KYC. So this is not an old school ICO. It's not the kind of, okay, here's a wallet, send your money in. It's not that kind of an ICO, but it is really like what we were seeing on CoinList and these other platforms, massively on steroids. The kind of scale really only the EOS has surpassed in previous eras.
Yeah. It was interesting too, because I was thinking that there were some ICOs in the 2017 era that were KYC. Like I remember Civic was the first one. And
it was kind of a gimmick, I think, a little bit.
It's true.
Yeah. Going back to the first point, which is like, why are people so upset about this? Right. I think it's really fascinating to me because it speaks to the fundamental tension that's like at the core of crypto culture and crypto spirit, which is that crypto is in part maximally capitalist, right? In a sense, Pump.fun itself is maximally capitalist. It's like, hey, let's create coins for everything. Yeah, people are going to feed on each other. They're going to extract from each other. Just let it happen. It's all the war of all against all. We literally call them the trenches, because it's sort of calling for violence, right? And then at the same time, there's a sense of like, oh, wait, why is Pump.fun extracting from the community? Which is almost a sense of like, okay, actually, we should be engaged in this kind of socialist project that you're supposed to be giving back, supposed to be running this almost like a charity, right? Which is a very, very actually Ethereum-coded complaint, right? This is like the whole Ethereum ethos, is that you're supposed to be giving back to the community and sharing with everybody and like airdropping everything completely and being totally decentralized. Pump.fun is not decentralized. It's never claimed to be decentralized. It's never used any of that language. It's never told people like, hey, we're all building this thing together. It's like, no, we're the team. You guys are in the trenches, and we are giving you guns, right? That's like they're basically arms dealers, right? And that it's funny that that this is the thing that everybody simultaneously went to, which I think again is like this contradiction at the heart of crypto.
But I do want to ask just about the fact that they had this $750 million in revenue. So I am just curious, like. I can think of reasons to justify like why they would need more money, but I was curious, just like for you as a VC, like I'm sure there was an opportunity for Dragonfly to invest. And I already heard Rob Paddock say like, it's just not like you don't normally invest in companies at that stage. But putting your VC cap on, like, do you feel it's justified? Do you feel like the valuation was justified? Like, what do you think of the numbers?
Well, look, the token is out trading now. And it's trading at $5.20, something like that. I'm sure it's going to move around a lot as people continue to get their tokens and as listings come in. So clearly the price was correct. Actually, I think they did a great job in pricing this thing because, like, okay, that's a good IPO pop. Is you're up 25%. You didn't leave too much money on the table, but everybody feels good for having participated. They're up a little bit.
And wait, I'm sorry. Did you say $5? Do you mean
I'm sorry. Okay. 5 cents or fractions of a cent, or whatever.
Yeah, half a cent. Right. Okay.
Yeah. Right, exactly. So basically, everyone's up about 25% if you participated in the ICO. So I think that's good pricing. That's what you want to see. Is that like everyone makes money, there's a cushion, and there's room for upside. I think it's hard to imagine Pump trading like significantly below where they priced it. So I think they were pricing it in a retail friendly way. But also the market environment changed a lot from when they originally announced that price and where the market's sitting today. Now we see coins rallying, Bitcoin at all-time highs, whereas when they originally were floating this price, things were kind of in the doldrums. So, but if you look at the pre-launch markets on Avo, and then Hyperliquid started listing yesterday, everything was around $5 to $6, basically the entire period. And so markets already were pretty uniform in their perspective that this thing should trade around 5 to 6 billion.
Yeah, there's two key things to kind of draft off of Haseeb's point here. One is, what's fascinating about this ICO is you had the majority of the capital formation on chain. 75% of the allocation went to wallets that were buying basically $1 million. So, that's typically not your retail investor. That's some level of smart money, and smart money that's really good at using on-chain infrastructure. This is not your TradFi, way of raising money, right? The other thing is, so you had the capital formation with Solana on chain, and then you had price discovery in Hyperliquid, right? And this is a very fascinating concept because, if you look at, like, I'm an investor in Circle, full disclosure, like we bought private shares years ago. Like, look at that IPO and the way that came to market. There's a lot of chatter about, oh, they left so much money on the table, or like, they kind of increased the price to go public at a couple of times. And then when they actually went public, like, they were forever trying to match the orders and this and that. It just feels like a very archaic way of doing things, especially for us crypto native people. And so Hyperliquid is actually like, the price, I think they flipped the amount of trading volume on there was like $500 million or something. It was an incredible amount of volume for a token that had not launched. And then it turned out the price was pretty consistent with where the token started trading earlier today, on Monday, July 14th. And so to me, there's something really compelling about the approach to capital formation on chain, and then the approach to, call it an on-chain way of doing price discovery, that just doesn't exist today in TradFi.
So the other interesting thing about this ICO was also the mechanics, which I think were pretty novel. So usually when we see an ICO, like in the olden days, or even, you go on something like, one of Kobe's platforms, whether it's Echo or Sonar, usually these ICOs are all in one venue. So you go to one place, you go to one contract, and you send in your money and you get your tokens. This ICO was very interesting because they used these distribution partners of basically 6 exchanges. So it was like Bybit, BitGet, Gate. They had a few others, and you could go in and put your order, whether it's on Bybit or Kraken or whatever. And apparently, the way that it worked was that each of the exchanges had some inventory that they were able to sell. They had a limit on how much they could sell, and each of the exchanges got a cut. So they sort of had, they were kind of these intermediaries that were able to sell more to their own customers. And Pump had an API on the back end that basically, when somebody says, hey, I got an order, I want to confirm this for my customer, you have to hit their API, and their API tells you, yes, you're good. And apparently what I'm hearing from some of these exchanges is that API did not work very well. And that's a big part of the reason why, like, it just got overloaded with the huge amounts of volume that were just slamming that thing. And of course, they built this themselves. So this was like a one-time thing that nobody really had the ability to test at the scale that they ended up experiencing. Because everything about this design, and I got the sense from this when I was chatting with the Pump team, because they were talking to a lot of VCs beforehand, getting advice about how to come out with this raise. And they were very concerned that maybe they weren't going to sell out. And so this whole structure was designed for, what if it takes like 3 days? Like, the whole ICO was supposed to take 3 days. Everything about this ICO was designed for, like, oh, what if the demand isn't there? And of course, in reality, the demand was massively oversubscribed because so many bids were hitting on chain that it basically flooded all of the partners. So the partners couldn't actually know whether or not they could fill their demand. And so you saw that Kraken accidentally overfilled. You had other exchanges that accidentally overfilled because they're just like, look, the API is not responding. We have to, if we give our customers 0, they're going to fucking kill us. So we have to get something and just like make it up on the back end. So anyway, it was kind of a mess, but this structure, my guess is that we are going to see, now that these exchanges have built out this apparatus, they are going to use it again. And so my guess is that this is not the last time we're going to see this structure play out.
Wait, I'm so confused when you say that. You mean the DEXs?
No,
right?
I mean the centralized exchanges. The centralized exchanges have all built this infrastructure now to be able to do these like coordinated ICO things at the same time. Like, as far as I know, Bybit or Kraken never built this before.
Okay, but if the fact that the API failed, like what it means is that whoever's having the ICO, like the quality of their API.
Yeah, they need to clean it up. Yeah, exactly,
okay.
exactly. It needs to
Right.
be designed for this kind of load, which this was the first run, and obviously Pump was not prepared for the amount of bids that they'd be hitting in the first few seconds.
And the irony being, all you had to do was go on chain with Solana, and it was totally fine, right?
Yeah, which is just crazy. What was funny to me is, so Bybit, it gave so obviously it refunded people whose orders were not filled, but then they also gave like a $20 trading credit or something, which I thought was hilarious. But Kraken said that they would actually airdrop Pump to affected users. So that was really interesting.
That's really, really good leadership by Arjun, in my opinion, to do something like that, because the dollar amount versus the public backlash, I mean, it's skewed such that, like, if you spend $1 million, hypothetically, I don't know what they're spending, but like, it's totally worth it, because then people are like, oh, Kraken is a good actor. And then you look at Bybit, and I mean, I have nothing against Bybit, but like $20 trading credit, because I know that some people that were trying to buy on, say, Bybit were shorting the perp on Hyperliquid to be delta neutral, and then they didn't get filled. And so now they're like upside down on their short.
No.
Yeah, there's some,
But when they be up on the short, because it's trading at 5 something now, and it was like 6 yesterday.
I'm saying like the day that it actually happened, like they were anticipating getting filled at some price and then shorting it and just capturing the spread, but they just had a naked short, unfortunately.
Yeah, I saw some tweets. There was this one from Fubar who said the biggest takeaway from the Pump launch is that Hyperliquid has officially taken CEXes in relevance. 600 million pre-market vol on Hyperliquid, 600K on Coinbase. Solana traders got pre-sale allo, Bybit traders got wrecked. Onchain has finally flipped off-chain for good. That was interesting. I did want to ask that one other thing about just like the math behind all this. I was curious what you thought of the token distribution. I mean, some of this was like not crazy, 20% to the token team, 13% to existing investors, 33% to the ICO, 24% to community ecosystem. But yeah, throw in there, you might have seen there were some people protesting the fact that there will be an airdrop, but it's only 10 million to the creators. So another comment on this was from Star Platinum Soul, who tweeted, Pump.fun has allocated a total of 10 million for its airdrop in an industry that has seen Uniswap at 6.4 billion, ApeCoin 3.5 billion, Arbitrum 2 billion, Bonk 1.3 billion, Celestia 700 million, et cetera, et cetera. So I don't know what you thought about some of those decisions there.
Yeah, look, I mean, people are going to be unhappy. It's just the way it is, right? Like as the CEO, I would not want to be alone at Pump.fun trying to figure this stuff out, because you have investors, you have your employees, you have yourself, you have the community, you have the creators, and somebody's going to get upset, right? And so I don't think there's a perfect science to this. Hyperliquid did an amazing airdrop. Jito did an amazing airdrop. I'm sure Haseeb knows of the folks in the Ethereum community that have done amazing airdrops. There are successful ways of doing this. And I do think that, one of the key things for a token to be valuable is distribution. And this is what happened with Bonk, right? They have like 1 million wallets now that's holding Bonk. They focused on distribution and then building utility into what they're doing with Bonk. And now you see the result of that, right? It's a multi-billion-dollar market cap meme coin, but they have all these products. They have a bunch of, diehard users because they distributed the token. If you restrict that distribution, then you have to find other ways of getting your token in the hands of other people. And so that's the thing I always talk to founders about, is like, optimize for distribution of the token to get it to as many hands as possible. And then you do your best from there. Did they do that with Pump.fun's allocation? I don't know. We will see. But, it's still trading above ICO price, which suggests that there's still reasonable demand and people aren't just flipping out of this thing.
Yeah, so I take a slightly different tack, is that the difference between Pump.fun and most of those other platforms is that Pump.fun already has extremely large revenues, high user retention. They never told people they were going to do an airdrop. They never even implied it. So there's not this like implied social contract that Pump has that many of these platforms did have, right? Like people who were on Hyperliquid,
Uniswap,
they knew they were playing for points.
Yeah,
Uniswap is kind of that immaculate conception where it was genuinely a surprise. and this meta had not really been invented. Uniswap kind of was the one to do it. But with Hyperliquid, they were from the very beginning incentivizing people with points, and the game theory was there that, okay, the people had to be satisfied with the airdrop. With Pump, like nobody was ever entreated, hey, go on Pump.fun because there's going to be a massive airdrop if you trade. People are just there because they love the product. They just love the experience. They love the community. And so anything that they do from here is kind of gravy. Like they don't need it, and they never promised it. Now, that being said, like you said yourself that there's 17% of the token that's set aside for community and whatever. I assume that's what that implies, is that basically it's incentives to get people to do stuff. An airdrop is almost by definition, it's like charity, right? It's like, hey, thanks for all the help. And that, like, how much of that they should do, I don't know. It made 10 million sounds low given the value of this token. But my guess is that they're kind of just winging it. knowing this team and knowing the way that they make product decisions, I think that's the answer, is that they're winging it. They'll probably change in response. We've seen already a few things about the ICO change, even from where it was previously announced. So I would expect to see that too on an airdrop. But that being said, the other thing that we've learned about airdrops is that it's actually very hard to tell what your users actually think from just reading community sentiment, because community sentiment overwhelmingly weighs toward complainers, because they've learned through experience that like complaining works. It's actually very profitable to complain, because if the cost of complaining is basically zero, and now we have all these bots and LLMs that can just do this at scale, and the upside is significant, because if you can bully a team into airdropping more of their token, like damn, that's all gravy. And like you can sort of take the brand hostage and say, oh, isn't it, it's a nice little sentiment you have over there on your airdrop or on your token launch. Wouldn't it be a shame if something happens to it and like, everybody just starts shitting on you?
Yeah. Yeah, no, totally. I did also want to ask one thing though. The fact that there was no lockup for investors, I thought that was interesting. I heard Rob Haddock even saying on Empire that he heard exactly what value or market cap it is that some of the VCs were planning to dump at, which like already I was just like, okay, that I feel like just hearing it made my heart flutter a little bit. I was like, oh, people are getting wrecked. But I don't know. What do you think of that? Is that maybe it's not weird? I don't know.
I mean, VCs is a strong word for investing into an unlocked ICO. Like the reality was that I think originally from chatting with the team, the plan was to raise a much smaller amount from institutions. And again, like a lot of this, again, the entire design of this raise was worst case scenario planning, because they just didn't know if the retail appetite was going to be there. And so originally they were planning to raise much more from retail and less from institutions. And then when the institutional bid started getting really crazy and they got all this money that was like, hey, we want to buy direct. And also they realized a lot of this money could not buy in an ICO, right? They can't go on Bybit and just go bid on shit, or go on chain and YOLO into stuff. So the only way that a lot of this capital could buy is buying directly from the team. But they got the same terms as retail, so everybody was on the same terms. It's just they were like, hey, if this demand is here, I don't know if it's going to come. Everyone's saying, oh, crypto winter, meme coins are dead, trenches are bearish, right? And this is what the sounds were a month and a half ago. So that was very much how they optimized this raise, and that's why there's so much quote unquote institutions. But yeah, it's obviously if you're buying an ICO with no lockup, like there's no expectation that you're going to hold.
That's right. Yeah, I mean, honestly, like getting back to Haseeb's point earlier about like hyper capitalism versus like, wait a second, kumbaya community socialism. It's like, look, if somebody puts money at risk and they have the opportunity to take profits or cut their losses, that's on them to do that, right? And so I don't think there should be any shaming of somebody who bought into this thing and they're up 25%. Because look, if you're a hedge fund who's managing hundreds of millions or billions of dollars and you put X amount of dollars into something and it's up 25%, that's a lot for a hedge fund that's operating at that size or scale, especially in TradFi. I don't think TradFi participated in this deal, but like conceptually, if you have that type of opportunity, you will flip out of it. And you're seeing a lot of this in the digital asset treasury vehicles today, where the pipe investors, get in at a really cheap price, the stock rips, and then all of a sudden the shelf offering gets registered for the ones that are RTOs, and boom, the stock price dumps. Why? Because people made a bunch of money. And it's like, this is the nature of the game. So it's not specific to crypto in this context of the pump raise from institutions. It's just the nature of people investing. And if you give people the escape hatch and they're up a lot of money, they're probably going to take it.
Okay. So now let's also talk about like even who bought, because there are some interesting Stats here. So first of all, it does look like so the largest number of buyers, the largest tranche was people who bought less than 1,000 worth. That was 8,200 people, and less than 200 bought more than $1 million worth. It does look like there was at least one account that was almost like Sybil buying, which is strange, but we don't need to go into that. It might be like an airdrop technique, like a Sybil farming type of thing. It actually looks like the overall number of people that participated was around, I think it's 13,000. So what did you make of all those points? And then even the fact, just going back to how we started this conversation about the fact that in order to participate, 24,000 people did KYC on Solana. So I saw Dune tweeted, "This shifts Pump from Wild West to structured entry, potentially attracting institutional interest in Solana's ecosystem." Not sure about that, but yeah, just curious for your take on the who question.
Well, those are the ones that we see on chain. Obviously, the vast majority of the capital was funded on chain because everything just sold out really quickly. So the other thing to remember is that probably a lot of people were thinking, I've got 3 days. This is a 3-day long ICO. That's what it said. And so, yeah, I can maybe after the first half hour, I'll go, or maybe in a couple hours later, I'll take some time on my, what was it, Saturday? I think when it happened.
Saturday, 10
Yeah, it was on a
Eastern.
Saturday. Yeah, exactly. It's like people are, they're like, I'll get breakfast, and I'll come back and I'll do the Pump ICO. And 12 minutes, everything was gone. So those are all the people who got in 12 minutes. I imagine if you include the CEXes of all the people who didn't get filled on CEXes, and you include anybody who was just planning to, enjoy their breakfast, or who was in Asia for that matter, because of course, yeah, exactly. The US and UK were excluded. So if you're an American, you couldn't do this deal. So it's all non-Americans.
Yeah, but the time, however, seemed like especially conducive to Americans. But anyway, not trying to take any stake
You have to KYC. So this is not like a VPN in kind of thing.
Yeah.
You have to pass KYC.
That's true. But yeah, Joe, do you have anything to add?
I mean, for the people that invested, look, the fascinating part to me is that, and this was kind of like my light bulb moment during the original ICO boom, was like, holy shit, we can actually do global capital formation in matter of seconds. Like it's such a huge change to the way that companies and businesses and people can be funded. And we had it happen again, right? With an arguably controversial, company / token launch. I don't think this is going to slow down. I don't fully agree with like the kind of hyperbolic statement that you showed earlier from somebody tweeting saying like CEXes are dead and this and that. And it's like, if you unpack that a little bit, Coinbase has like 50 plus million KYC'd accounts. Robinhood has how many? Revolut has how many? Like that's a network, right? So you can light up your network with things and services and products and whatever. That's pretty material. So I don't think that it's going away per se. I think to Haseeb's point earlier is like, it sounded like some infrastructure API scaling issues that were going on. But I just get back to what happened on chain, right? Like the activity on chain, as the, canonical Solana bull here, I was like, median fees were like 2 pennies, and that a year ago wouldn't have been the case on Solana, let alone 2 years ago. So I think this is going to continue, but I think it will be augmented with using CEXes as distribution outlets as opposed to being like the primary venue for raising money, because it's very clear that Pump probably could have done all of this on chain and had no real issue with it. I think it's important to acknowledge the fact that these distribution networks of potential KYC users exist in these exchanges, and that's not changing anytime soon.
Well, the other thing I would add to that is that Pump is also pretty unique. Right. One, it's probably the most well-known application in crypto, period. Second, it is very, very highly monetary in nature, right? So like the people who have a lot of money all know Pump, they use Pump. And this ICO took place on Solana, which is like the primary application on Solana right now is Pump.fun. So their ability to raise all this capital themselves and have this direct distribution is pretty unique. I don't think if we're going to see a wave of these ICOs coming back, my guess is that probably the next person who does it is going to rely more on the exchange distribution partners than Pump had to, right? Pump was worried that they would have to, which is why they had this structure. But then they realized on game day, they're like, oh, wait, never mind. We can fill the whole thing ourselves, not pay any middlemen any fees. And, it makes sense. That's absolutely what they should do. But, if you're the next person that says, hey, I want to do an ICO too, you don't have that kind of reach. People who have this kind of money are not, jamming their finger at 10 a.m. on a Sunday or Saturday to try to get your token.
That's right. And look, the interesting thing also that was kind of happening behind the scenes, there's a competitive launch pad called Let's Bonk from the Bonk team that leading up to the ICO, they just completely took over Pump.fun's market share of newly issued tokens and graduated tokens and fees, et cetera. And so even in the face of like the fundamentals falling apart for Pump into their ICO, they were still able to fill it in 12 minutes. Like that's pretty powerful.
Yeah. So we'll talk more about all of that, including the effects on Solana. But first, we're going to take a quick word from the sponsors to make this show possible.
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise and the space changes so quickly. That's why, every week, I write a 5-minute memo on the biggest stories impacting crypto, in plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
Wish you could access cash without selling your Bitcoin? Ledn makes that possible. The global leader in Bitcoin-backed lending, Ledn has issued over $9 billion in loans since 2018 and never lost a single Satoshi of client assets. Why is a Ledn loan different? With custody loans, collateral is not lent out to generate interest. No credit checks, funds in less than 12 hours, no monthly payments. Repay whenever you want, with 0 penalties. And proof of reserves reports, verified by a top accounting firm, are published every 6 months. Ledn gives Bitcoin holders a secure, transparent way to unlock liquidity without selling. Learn more at ledn.io. That's LEDN.io. Here are more listener comments. On Friday, we released my interview with Sam Tabar, CEO of Bit Digital, on why the company is going all in on Ethereum, not Bitcoin, and why he believes Ethereum is the real digital gold. Here's what Otis Vineyard said on X. Digital lumber, building material for the future of business on chain. Also on X, R. Kaplan1 wrote, Digital gold? It keeps changing its narrative, losing fees to L2s and shifting from inflationary to deflationary depending on gas fees. No, it's far from it, but it is still obviously a great asset. Again, if you want to hear a comment featured on the show, please write a review or leave a comment on an episode on YouTube, Farcaster, or X. Back to my conversation with Haseeb and Joe. So I want to go back to that point that Joe made about how Solana fees only spiked up to 2 cents, which is incredible. I was just curious, like how you thought this ICO would change the competition amongst the various chains?
Well, you know my answer. I mean, I actually see it more as like testament to the engineers that have been relentlessly building on Solana and making Solana a better L1. The hats off to them because clearly, there have been reliability issues in the past, even though it's been well over a year since we've had an issue with the network. And it goes to show that like the continued perseverance of the devs building Solana core are bearing fruit. And, when the Trump meme coin happened, fees went bananas because no one knew about it. I think people were somewhat prepared for Pump because they had announced it. But again, the stability of the network, I think this was another test and it passed with flying colors.
So I don't know because I haven't followed any of the Solana technicals here, but my impression is that like this is just a very different kind of event than the Trump meme coin. Like again, there was like 25,000 people who KYC'd, who even like had KYC ready to go. And so it's not like you have thousands of people, slamming buttons or bots going everywhere. There's nothing to bot, right? Like you got KYC and then you put in your bid. And of course, because it's a blockchain, bidding $1 million or $20 million, or takes no more transaction fees than bidding for $100. So because everyone expected that the Pump.fun ICO would be for 3 days, people were talking about, oh, is it going to sell out or not? Is there the demand? Oh, these guys are getting desperate. That's why they're like trying to raise all this money, and they're trying to cash out at the end. The sentiment was so negative. I think people thought that it wouldn't be that big of a deal. So it selling out in 12 minutes was really a surprise, but it didn't comprise that much on-chain volume, right? It's just like 25,000 people is nothing for Solana. That's just like, that would just disappear in the metrics of who's actually trading on-chain. So I think it's sort of deceptively a non-event from a technical perspective, even though in terms of capital, it was absolutely enormous.
Yeah. Do you think, and maybe because you're probably closer to this than I am, but do you think Jesse and the team over at Base are looking at this going like, hey, how can we enable folks to do these types of ICOs using Base?
I mean, it's notable that Coinbase did not offer this. They didn't do this. Kraken did, right? And the fact that Kraken did it was notable, surprising, because Kraken is very highly regulated. They sort of play by the rules. They're not one of these international kind of overseas exchanges. So the fact that Coinbase didn't do this, to me, implies that, like, look, they're still a little wary of being too close to something like this. Kraken, they don't have as much U.S. market share. They're mostly European, and so they're kind of like, fuck it. Let's. I don't know. I'm kind of imputing motives. I don't know that we're really there or not, and maybe they're slightly regretting it now. They had to, basically go short Pump because they weren't able to get their stuff filled. But I think the answer to me is that, like, the quantum of capital that any of the exchanges got, right? Because they each probably sold in the order of like 20, 30 million at the most. And then some of them had to like backfill some that they didn't get, like, Kraken doing this airdrop, or Bybit giving out credits. So like probably like they might even be losing money net on this whole deal, because of course they're only going to keep a small portion, right? They're not keeping like 20% of the proceeds or something. So this tells me, because of the fact that they weren't able to sell out, that this is not yet a big business line for exchanges. I don't think they're looking at this and saying, oh my goodness, I can't wait for the next ICO. They may be saying, wow, this was a huge moment that our customers really demanded, right? Our customers are really mad about this, that they didn't get access to Pump, or that they didn't get their thing filled. And so maybe this is more like, when you like, a big part of the reason why you do new listings as an exchange is not because new listings generate a bunch of volume. Oftentimes they don't. It's more that they generate a lot of attention, and everyone wants to be on the exchange where they get access to the new listing. But most of your fees come from trading, the regular old stuff, from Bitcoin and Doge and, XRP and all this other stuff. That's where most of the money gets made. I think this might be something like that, which is that it doesn't make a lot of money, but it's a very important headline. In the same way FTX used to do all this stuff where they'd list all this random crap just to get a headline, and they would bring people through the front door to get them to trade, the real moneymakers.
Yeah, my thought is about like why Kraken did it is I think Coinbase, their like customer base is very, very retail and very US. And I think Kraken's is like probably more whales. So those are the people who are going to be more interested.
You think whales are more interested than retail?
I mean, like, if you just look at the distribution, like, yeah, there were a number of like, small accounts, but like, I don't know, there were a lot of people that wanted more than 1 million. So like, I guess what I'm trying to say is like, it just, even from the research I did on like the earlier ICO era, whales have a lot of influence. So even if like there's just a small number, but they bring in like a huge amount of business for your exchange, you're going to like do their bidding, and I would say that I think Kraken's business is probably more dependent on them. So it's not about like the numbers even, it's more about like just influence.
Yeah, I don't know that that's true. I mean, Kraken is dominant in Europe, and so I don't think Europe is like more whale heavy than the US is. I think it's much more that if the US and UK are excluded from this sale, then those are Coinbase. I mean, that's the strongholds of Coinbase. So on some level, it's kind of like, okay, maybe it's even just confusing for Coinbase customers if Coinbase announces that we are supporting the Pump ICO, but guess what? If you're American, you can't do this. That probably would make people even more mad than even the people who got in, to say nothing of people who couldn't get in who actually were eligible. So that may have been the calculus, maybe not even the regulatory risk. But I would guess that the regulatory risk, as well as the fact that Coinbase is public. Right. So maybe it's just like, look, I don't want Wall Street analysts talking about me offering Pump token, or even bring it into the conversation, because it's only going to hurt me to be associated with meme coins. more than I need to be.
But Kraken is saying it wants to go public. So you feel like...
Well, it's not public yet. So, like there's a big difference between wants to be public and is public.
Right.
Yeah. One thing to note, Coinbase did launch a perp for their offshore venue. But it had, there was a pump pre-list, a pre-listing pump perp for Coinbase, but it's their offshore venue. You still can't access it if you're in the US, right? And it did very little volume relative to Hyperliquid, but they did try to get involved with, for price discovery, but not so much the ICO itself. But I think Haseeb's point is correct. Like Kraken, dominant in Europe, still a private company. And I mean, even what they did with tokenized stocks, instead of going the route of like, an L2, like Robinhood's doing, they're just like, it's an SPL token, like let it rip. So I would not be surprised if they were like, yeah, of course we're going to do the Pump ICO. Okay.
Yeah. All of that makes sense. But it's interesting because like their strategy is confusing with the Ink blockchain being on, it's an OP stack chain. So yeah. If anybody from Kraken's listening, maybe you want to reach out and explain.
To be clear, we are completely speculating. I have no idea what these people are thinking. Yeah. It could be they never even approached Coinbase, right? Who knows?
Yeah, but this question of will ICOs take off on Base is actually interesting. I don't know. I mean, Haseeb, you literally just talked to Paul Graywall, and I got the vibe listening. I wasn't watching the video, so I couldn't see his face, but I got the vibe like they don't see meme coins as like a big thing, and I don't know, or not that it's not a big thing, but they themselves would be worried to do it.
I don't know if they'd be worried to do it. I think it's very clear that Coinbase is in a unique position because they are the representative of crypto to Wall Street. And Wall Street doesn't want to hear anything about meme coins. They want to hear about institutionalization. They want to hear about, Bitcoin as a macro asset. They want to hear about ETFs. They want to hear, they want to hear about tokenization of real world assets. That's what they want to hear about. And Coinbase understands. They are listening. They see what happened to Circle, and they're like, okay, cool. We will march to the drum of that beat. While at the same time, we are going to, basically take our retail customers and have a very, very profitable retail-facing business, right? They make almost all of their money from retail, and they know that. They understand that, like, look, it's the custody business is not what's bringing in all the revenue today. So that all being said, it's a fine line that they have to walk. Getting involved in Pump.fun does not help them walk that tightrope in any way. And the revenue is probably de minimis for something on the scale of Coinbase.
Yeah, but I do think that this knows, like they're doing all these campaigns constantly to get more people on chain. They're having this big announcement.
Yes, well, you see what Jesse's saying on chain. He's like, yeah, just coin it, like let it rip. Internet capital markets. So they're embracing this, but Coinbase itself never talks about this, right? And again, this is strategic. Is that's what you want. What you want is for one side of the business to be able to be presentable. It's like, we used to talk about the DeFi mullet. This is like the CeFi mullet. It's like on the one hand, you are talking a big story about tokenization and how institutional crypto is, and, lobbying for, bills and so on. And then the other side, you're just, entreating people to like buy random shitcoins on Base. And that's great. I'm glad they can do both. It would be a worse world if they had to choose one side or the other.
That's right. Yeah, I agree. I mean, I am stoked that Coinbase is, but Brian puts on the suit and tie and goes to DC, right? Like we need that as an industry, and it's clearly working. But yes, you're still going to have the experimentation, innovation that's happening on chain that isn't, tailored towards the kind of suit and tie Wall Street, DC policymakers and investors. But great, focus on that. The folks at A16Z do a great job of this as well, being in DC and helping drive change there. But there's going to be a lot of other folks that aren't going to be carrying that torch. They're going to be more like in the trenches, so to speak. And I think having both is valuable. And to Haseeb's point, Coinbase has that with Base and also what they do with just Coinbase, the company.
Yeah, so we'll see what happens on Base. But I personally could see the Pump ICO inspiring a new wave of ICOs on Solana. So, Joe, I know you retweeted and said that you thought that was likely. So we'll see what happens. I don't know if anybody's...
It's really good engagement farming. So thank you for letting me
Nice.
All right. So let's see. So, okay. So we did talk a little bit about the trading that's already happened today. But I'd be curious, like, do you have any projections for what would happen to the market cap kind of over the next, whatever, like, I don't know, few months?
Well, not financial advice. I'm not an investor. Don't hold any pump. But I think right now there's still a lot of price discovery happening because my understanding is that not all the tokens have been delivered yet. And the other thing is that the listings are pretty scarce right now. So I saw earlier today, it's on Bybit, it's on KuCoin, and then it's trading on PumpSwap. And right now PumpSwap has the most volume and the most price discovery because, of course, most people got filled on chain. At equilibrium, usually the answer is that these tokens get most of their price discovery on Binance. So Binance hasn't listed yet. And when they do, probably there's a lot of people who, they maybe did the Pump ICO and they don't even know how to trade on a DEX. And of course, there's a lot of institutional capital that invested in this thing that is still, might not even have their tokens delivered. And if they did it not on chain, probably it's because they can't trade on PumpSwap. So that price discovery is going to happen soon. And when that price discovery happens, one, it may mean that retail gets access to Pump.fun, where right now, like again, if you're a Binance user, never gone on chain, don't know what Phantom is, you can't buy this thing right now. Once you can buy it, okay, that's something. Second, the institutional investors who may want to sell and they say, hey, I'm going to lock in that 25%, those people haven't gotten a chance to sell yet. So there's two sides of this market. My guess is we're going to see a good amount of volatility until, call it a week or two, once all the listings are in and everybody can kind of get their initial positions moved to where they want it to be.
Yeah, I agree with that. And I think I have always been anti-price targets because I think they're just a product that Wall Street created to sell shit. And so I just am like, pick a number. It doesn't really matter. I do think there's a couple things to, underscore here. One is a lot of folks will try to back into a price based on fundamentals. And this is kind of like the running joke in crypto is that they tend to not really matter, especially if you're using TradFi models to apply to, say, a network or a protocol or something to that effect, right? There are plenty of protocols and tokens associated with them that from a fundamentals basis are like dirt cheap, but the price doesn't really move. Why? Because this gets to my second point, which is all about the attention and the engagement associated with said token. Because the token, love it or hate it, is the product, right? For the most part, once the token is out there. And so how does Pump.fun continue to garner attention and thus want people to hold their token? Well, they have a plan, it sounds like, very ambitious, to take on Twitch and, TikTok and whatever, which is great. Like I spoke with this guy, he's a creator in the Solana ecosystem named Soul Jakey, and he was asking me about like creator coins and the whole concept of this. And right now, the streaming world is, the people that are like the top streamers are making fortunes. It's unbelievable how much money they're making as top streamers on Twitch or wherever, but there's no kind of, there's no token, right? So maybe the plan is that Pump.fun wants to create this kind of new streaming platform that enables creators to create their own tokens. And then there's a market immediately that can trade it. And, it's more and more and more engagement, right? And if that happens, then you'll have a lot more engagement, I think, on the Pump underlying token. The key thing that I kind of look at as well is what would be the comp for Pump's valuation? And there really isn't one. As a big fan of Bonk, I'm stoked that the higher that FDV goes, that means Bonk is likely underpriced because Bonk is actually doing, from a fundamentals basis, more of the token launches, more of the volume, more of the graduated tokens on their platform. And those fees go back to the Bonk ecosystem, which burns half of Bonk and puts another 15% in a validator, et cetera, et cetera. So I'm curious to see where that equilibrium is that Haseeb's describing, because if it's 5 billion, if it's 10 billion, then I would look at comps like Bonk and go, this thing is radically undervalued relative to where they're pricing something like Pump.fun.
Okay, so yeah, let's talk about that because you mentioned this earlier. So, the Let's Bonk competitor to Pump.fun had surpassed Pump's 24-hour revenue. I think it was like a couple of days last week. As of last night, it was still ahead, and this actually also this morning.
Solana today, it's behind.
Oh, it is.
Yeah.
Okay,
yeah, but they're pretty close to each other.
Okay. But actually this morning, kind of early, Solana Flora tweeted, BonkFun has surpassed all other Solana launchpads combined, including Pump.fun and weekly revenue for the first time. And listed some stats. Tokens graduated on BonkFun was 1,243. Pump.fun a little over 600. and tokens launched on Bonk.fun was 130,000, on Pump.fun 77,000. So I was curious, like, so Joe maybe is like most familiar about what's going on here. Like, is it that is it just like some kind of incentive thing? Like people are just switching due to, I don't know if like what's going on, but like, why do you think this shift has happened?
Yeah. So, this is just my own opinion on this, but we've been talking about it, that folks like Pump.fun, but the sentiment around it is pretty negative. That, people see it as extractive, and you've got all these, crazy scammers and rug pulls and like whatever. And that is associated, unfortunately, with Pump.fun, even though they're just facilitating stuff to happen. Bonk is kind of like Solana, and you're rare to find someone who isn't a fan of Bonk if you're in the Solana ecosystem. And it's a team of really cracked developers, right? They have myriad products that generate real protocol revenue in Sol, and a lot of that goes back to buying Bonk and burning it. And so my kind of intuition here is that folks are more aligned, at least currently, with something like the Bonk community and their launchpad versus Pump.fun, which appears to not be aligned with the community. Now, next week, the data could flip, right? But that's at least what we're seeing today. Is a lot of the folks, the majority of the tokens created on Pump.fun it's not like tens of thousands of people. Those wallets are now deploying over on Let's Bonk, the Bonk platform. And so what will drive them back? Maybe Pump.fun creates an incentive program, or who knows? But I think you're going to see this battle between the mascot of Solana, the community backed, like people love Bonk, versus Pump.fun that's like flooded with cash and has made tons of money and has these big ambitions, which is great. I think that competition is super healthy. I have no idea who's going to end up winning, but it's probably a winner takes most.
Okay, I'm going to make like a slightly weird comment. See what you think. Maybe it's not weird, but I went on Let's Bonk because I was kind of like, what is this? And I have to say, like, somehow the memes on it or whatever, or the meme coins, they were less appealing to me than the ones on Pump.fun, which I know like 99% of all of this is trash, but like somehow, I know this is like such a weird thing, but I feel like the higher quality meme coins that are all shitcoins that are mostly going to go to zero, were like better quality on Pump.fun. I don't know. Is that like somehow the culture around the Bonk launchpad felt, frankly, I'm just going to say it felt like more Asia coded, but also so like not culturally US coded to me as like a potential consumer of these coins. Is that like an actual thing? Like, because I don't know the demographics.
Yeah, I mean, it's tough to identify, geo based on wallets, but Bonk has been investing for years in Southeast Asia in terms of just raising awareness around Bonk in general. So that may be part of it. I think the other thing though is like, Pump.fun got to like a 4chan meets meme coins for a while there, and you still have this type of stuff no matter what. It's a permissionless network. You can't control it. I don't think people actually care, right? The traders in the trenches are just looking for the next 100x runner, as they call it. They're not like, what is the image, or what is like, for the most part, they really don't give a shit. It's just they're all competing in this PvP game to see what is going to be the next, 100 or 1000x runner, and 99.9% of them are zeros. So I don't know if it's clearly subjective from your own experience, but I think for the most part, they really don't give a shit. In a lot of cases, most people aren't even on the actual website. They're just, if they're running sophisticated bots, that's where they're making a lot of their money.
Yeah, I don't trade meme coins, so I can't really speak to the vibe difference between the two. But I'll say from my experience as a VC, it doesn't surprise me to have seen a competitor emerge, especially now when the sentiment around Pump is so negative. And there's a sense that like, oh, meme coins are over extracted and, blah, 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 the trenches are done. Very often what you see is that when a particular social scene or like a social network gets kind of tired, it's been around for a while, like it's sort of gotten entrenched, it's become very well understood. It's very hard for new creators to emerge and to get mindshare. That very often creates the circumstances for us a new network to emerge and to define itself as being younger, having a different vibe, a different aesthetic, allowing different voices to be successful. So this might be part of it. There's also a little bit of cross-subsidization happening on Let's Bonk that's coming from Raydium. So I don't think that has that much explanatory power, but there is something there. That being said, I would not bet against Pump here. Now that they have $1 billion in cash that they have raised, in addition to all the SOL that they own, and in addition to now having this giant token treasury that they can, just shoot out like, a t-shirt cannon at anybody they want to, if they want to reclaim the market and say, fuck you, Bonk, like it's over, they have the ability to do that in a way that very few other projects do. So judging from the way they behaved in the past, I'd be very surprised if you do not see Pump.fun come out here swinging to try to crush Bonk from here.
Okay. So I did want to talk about their plans, the plans to kill Facebook, TikTok, and Twitch. So in light of that, what do you make of the first acquisition, this KOL scan or KOL scan, which is basically a tracker for Solana whales on chain, has a leaderboard, it has real-time data and analytics. Pump said that they plan to add copy trading features, which gave me like James Wynn, LA Vape Cabal vibes. But I wondered what your thoughts were about that acquisition and just generally their prospects for their overall strategy or plans.
It makes a lot of sense. Like they know that, platforms like Axiom and Photon have owned a lot of the stack. Like there's a lot of people who are trading things on Pump that are not going direct. And they understand that, like, hey, that's a lot of the revenue stream is actually getting captured by intermediaries. We should verticalize, right? The same thing that OpenSea figured out with Blur is that you do not want to get disintermediated. If you do, a lot of the revenue stream, especially from sophisticated traders, is going to go to somebody else. So I think their answer is very straightforward. It's an old playbook that we've seen from many, many players, is that if you see these intermediaries, grab them and verticalize.
Yep, I completely agree. I mean, it's consistent with like any company that raises a shit ton of money and they're like, all right, we have our organic growth prospects, but what about our inorganic growth prospects through M&A? And to Steve's point, they should vertically integrate and create like the ultimate platform. Because remember, if they're going to be creating this, super high-powered streaming capability, well, then they're going to need trading and swapping and analytics and portfolio management, like all these other things so that they control the experience end to end. Because the problem with partnering in general, has nothing to do with Pump, in general, when a company partners with another company, they don't control that UX. And so I think if Pump is focused on controlling the UX and providing a seamless experience, it makes total sense to acquire something like this, amongst other things that they will likely acquire in the future.
And what do you think about, so apparently I think they're planning to have a buyback tied to some of the Pump revenue that's generated. And I guess already actually PumpSwap, their DEX, is already sharing 50% of its trading revenue with token creators. So yeah, what do you think of those plans? Or just like, generally, like what do you think is their prospect for taking down Facebook, TikTok, and Twitch, or if they were going to try to do that, like how would you, what do you think would be a good plan for them?
Maybe on Facebook or TikTok? Shit.
Yeah.
A lot of luck.
Yeah, I mean, look, I obviously it's some bullish shit to say, and it's great. You should say bullish shit. Right now, they need to take down Let's Bonk. Like they're obviously there's a much smaller competitor right in front of them, and I think the idea of like, hey, let's also own the entire meme coin value chain. Of like in a way, I can imagine them starting with, okay, we're going to build our own pro interface that is for everybody who's got a second screen, that they've got Pump over here and they've got Axiom or they've got whatever, or they've got like 5 other things. They got bubble maps here, they got this thing there. What Pump really wants is that it's one screen. It's all my platform. You're not going anywhere else. You're not looking anywhere else. And you can imagine maybe even at some point they start cutting off or even like trying to actively interfere with other people's ability to like use Pump effectively from a third-party platform. And at that point, then you can start thinking about these bigger ambitions of, hey, how do we start getting more versions of content and start creating more of a social network type thing. I don't really understand the path from here to there. I think what they're building is just so fundamentally different from a TikTok or a Facebook that maybe I'm just insufficiently imaginative. What I think of Pump is that they're pursuing financial entertainment. And financial entertainment is fundamentally very different than what most people are doing on TikTok or on Facebook. I do think it's something that Gen Z is much more tuned into than previous generations. And so I can see that this thing could become really big. But the idea that it would kill TikTok, not really. But could it become as big or comparable to something like TikTok? I can see that story.
Yeah, I mean, I think I was looking back at this many years ago because I was like, how does anybody usurp Facebook at this point? And Facebook, Zuck did an amazing job of creating a huge social network and then buying another network, Instagram, and then buying another network, WhatsApp. And now you've just compounded all of these networks, right? That's very, very difficult to disintermediate. However, you have something like TikTok show up and it's a fundamentally different user experience, right? The experience of TikTok is it's nothing like Instagram. It's nothing like Facebook or WhatsApp or whatever. And so when you have this kind of 10x improvement in user experience that's innovative, that captures people's attention, you can end up with the explosive network that TikTok has created. With Pump, they're going to have to do something that is a 10x better user experience than people that are streaming on Twitch, that also enables, these kind of capital markets or trading around the streamers themselves, right? Because if you're Kai Cenat right now, you're getting paid millions of dollars by anybody because your audience is enormous. He's not leaving that platform. He has no reason to. So then the question is, how do you get creators that aren't Kai Cenat, that are huge, to use Pump streaming platform and then have a breakout success so that the new generation of, call it teenagers, people in their early 20s are migrating towards this new platform and away from things like TikTok and Instagram? I think the success is going to be highly tied towards kind of a younger audience that's coming into this space via the streaming component, but now they're exposed to crypto. That's a really, really aggressive and ambitious bet to make, but that's kind of how I see this playing out if they're going to be successful. I don't think it's like we're just going to get all these people from TikTok to leave their experience at TikTok to come to Pump. I don't think that's the case. I think it's something else.
Yeah, no, exactly. It feels like it's going to be a generational play. And then the money component is going to attract these young people. And frankly, even kind of creating a more gamified experience, which is, I think, like what we've been seeing with Pump. And then there was one other thing I was going to say there. Anyway, I just forgot it. But I know we have to run. But is there any last comment that either of you want to make?
I'll just say, I think meme coins, people have for a long time talked about like the death of meme coins, or meme coins are over. And I've always said, I think about it like software. There's like a 1.0, a 2.0, a 3.0. And I think that this is just like the next kind of release, if you will, for the meme coin software craze that's happening. And with the capital that they have raised, this stuff's definitely not going away anytime soon. So I'm actually excited to see what happens just in the kind of experimentation innovation front from Pump and others, particularly the Bonk team, as to how this space continues to emerge. Because clearly the fact that, tens of thousands of tokens are still being created every day, there is something there. I don't know. You're not going to explain this to TradFi Wall Street bros, but the folks in the trenches and in crypto certainly love it, and I think it's just going to continue to accelerate.
I guess the closing note I would give is that I think it's quite likely when we look back, a year later on this cycle, we are going to remember the Pump ICO as being the marker of a new phase shift in alts, right? So we've already had Bitcoin and Hyperliquid basically being the only two tokens that have made all-time highs this year. I think by the end of the year, there are going to be other tokens, a lot more tokens that are going to make all-time highs. Maybe not all-time highs, but let's call it, yearly highs, pretty significant highs from this cycle. So if you just look at like the markers of what's been going on in alts, where I think it was last week that Snoop Dogg sold $12 million of NFTs. We just saw $1 billion raise for Pump, and the biggest ICO that we've seen in years since the ICO bubble sell out in 12 minutes. To me, this is a sign that there is more coming. There's going to be more crazy, frothy stuff that's happening. And so far, it's only been Bitcoin, treasury companies, and Hyperliquid. I think there's a lot more to come from here. And to me, this portends like, hey, alt cycle has arrived.
Yeah, I remember the comment that I was going to make, which is the Coinbase wallet event is on Wednesday. And they have kind of hinted that there's like a social network element to it. And if we even think about like the lead up to this, which was Robinhood, it's all this like, let's target younger people. Let's have this live streaming component. Like it feels like the mashing up of crypto and social are really coming together. All right. Well, this has been awesome. Where can people learn about each of you?
You can find me on Twitter. I'm Haseeb. Just Google me, or you can find me. I'm easy to find.
Well, it's been a pleasure having you both on Unchained.
Thanks for having us, Laura.
Thanks so much for joining us today. To learn more about Joe, Haseeb, and the Pump ICO, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Juan Iranovich, Pamela Jimdar, and Mark Akuria. Thanks for listening.